right, family, how y'all doing? It's Brian over here. And what I'm gonna do real quick, guys, for some of you who don't know and who are in the group here for the first time, and some of you are old vets, what we're gonna do is I'm just gonna go down one time and show you how this program is gonna work with the money that we're raising for our insurance trading program. The whole purpose, let me run it down again. The entire purpose of what we're doing now as a group is to raise the funds that we can go ahead and get one insurance trading package going. It costs $500, and we're going to produce around 10% a day, exactly 10% a day, every day, actually. And the idea behind this, of doing this as a group, because we can do this completely risk-free. I'm talking about completely risk-free. That's going to be the way that we're going to set this up. There is going to be absolutely no out-of-pocket expenses that are not recovered. So once we get this thing going, we'll be able to generate basically free money. And from that, you guys will be able to determine for yourselves how well the system works, and then you'll be able to decide whether or not you want to go ahead and get a $500 package, or a $5,000 package, or a $50,000 package, or whatever you want to do. You'll be able to evaluate the system on that. So that is the general purpose of what we're doing right now, and this is going to be a demonstration of how we generate those funds. We start off with two programs, two platforms. We have our options trading program and our Forex for our insurance. At a minimum, the minimum requirement is $250 per side. That is where we get the $500 from. Okay, so like I said, these are demo accounts that I'm showing you right here. So you said with 24,000, I'm just don't think we need that much money. We only need $250. Okay, so first thing that we were going to do is for you guys as traders, you will go ahead and place the orders that were given to you guys from the signals that we send. And if you're an investor, you don't have to worry about any of that. We'll do this on the back end. So first thing we'll do is get these trades placed, and I'm going to get right back to you once we have the actual trades placed, and then we'll go ahead and we'll hit the insurance. Looks like our first ticket is going to be the Aussie dollar, and we're going to be selling that at $27. And our next one after that will be a buy for around 75. Let's see what we have here. And the buy side on this will be for right now like at 73.50. So we're going to go ahead and take that, and we're going to have a buy side. Okay, and we have our two tickets placed. So we have our tickets placed of a buy at 780 and a sell, a buy at 760, a buy at 760 and a sell at 780, which is 20 pips. And this is a much tighter trade than we normally run, but this is one that we can run just as well. But we would normally do this a little bit wider, but right now this will serve the purpose that we're looking for. And we have our pricing, and next we will set our insurance. All right, so now we have gone ahead and we've placed our protective insurance orders. We have them starting at 760, going down to 750, and 780, going up to 790. These 10 pips represent $10 a pip, and there is $100 in profit right there. Now, here is the strategy behind this. And let me go ahead and put this on the chart for you. Okay, here is the strategy for what we're doing. Now, as you can see, our binary options are in red, and here we go. We have our binary options here in red, and as long as price remains inside of that barrier, then those two options will be good for a combined total of $50. If price should breach that and come down outside of that and hit our take profit, we will have a win of $100 in insurance. We will have a loss of $75 in binary options on the short side. So that is a win of 100, a loss of 75 for a total of $25. And the top option will also be good for $25 for a combined total of $50. So either way this goes, one or both of these situations will produce $50, and one or the other must happen. Price must stay inside the barrier and make $50, or price must come outside of the barrier, and we make $50. One or the other. There are no other options. So this system will provide us with a solid 10% managed properly, and that is the trick to it now because we have the money in place. This is called dynamic hedging. The funds are there, the money is in place, and now it is simply a matter of managing the trade to its logical conclusion. So this is what we're doing, and this is a brief overview of multi-platform insurance trading, and this is how we're going to make some money. I will also get back to you guys with the results once we have a total of $50 profit all the way. And that's going to happen probably when the price hits our take profit, which will be, who knows, or at 3 a.m. our time when the contracts expire. One of these two situations will occur, and we will have a total of $50. All right, I'll see you then. But we have our money.